Welcome to our second installment of our Fireside Chat series, powered by the Eastern States region of American Heart Association. My name is Arisha Smith, Chief Revenue Officer of Streamlytics, and I'm your moderator today. Today, we will discuss how to raise capital and build and request funds for your startup company, your startup business. African Americans typically have a challenging time getting access to funds, so we're going to dig in it today with our special panelist, our guest. But first, a word from Dr. Reginald Robinson. He is President-elect, American Heart Association, Eastern States Board of Directors. Dr. Robinson, take it away.
Hello, my name is Reginald Robinson, a proud board member of the Greater Washington Region American Heart Association and President-elect of the Eastern States Board of the American Heart Association. My full-time job is as a cardiologist at MedStar Washington Hospital Center in Washington, D.C. On behalf of the American Heart Association, thank you for joining us. We have been going through what I call a triple crisis in America and abroad: a social justice crisis, a health crisis dealing with the COVID pandemic, and an economic crisis, all magnifying the social injustices and inequities in communities of color. Did you know that 44% of African American business owners had to use their own savings, finding it difficulty to get financing? We did at the American Heart Association. We've been reimagining partnerships, bringing community leaders as well as entrepreneurs together to find out ways of dealing with issues in their own communities, to serve the communities in dealing with social determinants of health that impact the communities through our Empowered to Serve Accelerator, a Shark Tank-like process that focuses on health-related ideas that can help our communities. I urge you to go to empoweredtoserve.org to find out how you can become involved. Let's begin our chat.
I would like to welcome our first panelist, Arian Simone. She is an entrepreneur, investor, philanthropist, best-selling author, international speaker, and PR and marketing specialist extraordinaire. Arian has over 17 years of experience in entrepreneur success. So I'll just stop there. She has successfully built and grown a PR and marketing firm. And after that, Arian built from the ground up an amazing platform that super serves female entrepreneurs. It is called Fearless, and across all the Fearless brands, she has touched at least 20,000 female entrepreneurs. Welcome, Arian.
Oh, thank you so much for that introduction, and thank you all for having me to be here today.
Absolutely. We're super excited that you're here. Can't wait to dig in with what you're going to share with us. Give us these nuggets.
Well, I'm looking forward to it.
I would also like to welcome Ayana Parsons. She is co-founder and partner at Fearless Fund. She brings over 20 years of executive talent and leadership experience. Welcome, Ayana. I'm so glad for you to be here with us today.
Thank you so much, Arisha. I'm so happy to be here. Such an important topic.
Okay, so let's jump into our first question, and we're going to start here. Since this is a faith-based accelerator, the latter part of Luke chapter 12, verse 48 says, "To whom much is given, much is required." And to have a fund, the responsibility and the power and the level of service that goes into having a fund, especially a mission-driven fund, such as yours, such as the Fearless Fund, that really kicks up the level of responsibility. And the importance of making sure that you're doing what you said that you're going to do with your fund and with the investment that you're making into the entrepreneurs. So I want to hear from you both. Arian, talk to me about how you balance out these levels of responsibility with having the power, serving the community, and making sure that the entrepreneurs that you're investing in, definitely line up with your mission.
I'm so happy that you mentioned that scripture to start off with. That is so true. To whom much is given, much is required. And we understand here at the Fearless Fund, where there is power, there is also responsibility. And we do not take that lightly. We are called to be in the position of what we're doing right now for such a time as this. At the Fearless Fund, we invest in women of color businesses pre-seed, seed, and Series A round. So that's early stage. And we understand what this mission is doing for our communities. It's creating more jobs in our communities. It's reducing the wealth gap. It's circulating dollars in underserved communities. And we are so honored to be in this position. And we know it comes with a lot of weight. We run an SEC regulated business, a $25 million fund, and growing. And we look forward to the impact that we're making in the lives of this generation and future generations. So we understand that there is a lot of responsibility that comes with this. But as always, there are priorities, and that's what keeps us moving. I don't say that there's a such thing as balance. There are priorities. And as a team, we get the job done and we understand the impact we're making. And our why is what keeps us going.
I love that, the why. So Ayana, dig into a little bit. When Arian says the why, and you look at the entrepreneurs and the types of companies that you invest in, tell us a little bit about those. You know, are there some that are mission driven? Or are there those that are mostly focused on consumer product goods, tech? Tell us how you look to create a diverse group of the entrepreneurs and of the businesses that you invest.
We, at our core, are a mission-driven organization. As Arian shared, we are the first venture capital fund founded by women of color, investing solely in women of color-led businesses. And what we have consistently seen with our portfolio companies is they too are mission-driven. Half of our portfolio is tech. So we've got a few fintech companies, we have data and analytics companies, artificial intelligence, but then we also have consumer packaged goods that can fall into the categories of food and beverage, beauty. But at the core, all of our entrepreneurs are trying to help the communities that they serve. I think a great example of that is Slutty Vegan. Slutty Vegan is founded by Pinky Cole. It is an Atlanta-based restaurant. It's quick serve. And she is essentially democratizing veganism, going into food deserts, going into underserved communities, and providing plant-based food options. That is just one example. And by the high growth that she's had and the scale, she's done a 50 city food tour to expand her reach. And as she expands into new markets, that's just creating a whole host of other jobs. And again, solving an unmet need in underserved communities.
Unfortunately, when it comes to internet access and access to fresh foods, the African American communities are typically left out of that. There's always a food desert. Internet is typically slowed down. There's not enough connectivity and so forth. And with the pandemic, it really it highlighted how big the gap is. And so what we saw in the pandemic is it really highlighted the haves and the have-nots. Those that had the discretionary income to support their families, access to high-speed internet so their kids can have school at home, access to purchasing groceries at, some of the healthier, fresh-grown, locally sourced. So they are quarantined in comfort, while those that have not, day-to-day was extremely stressful. I mean, I'm sure you guys have some examples or some type of testimonies that you've been hearing.
Oh yeah, the pandemic had so many different effects. It was very, I would say heartbreaking is just the best way to describe it. So many people were even emotionally depressed. The financial implications that it had on the Black community were destructive. As we know that our economy is even built on over 50% are small businesses. And with that being said, over 50% of Black businesses had to close their doors due to the pandemic. The immediate number was 41%, but then it grew to around 50. New York Times reported it, CBS reported it, and it was very heartbreaking just to watch our businesses close. Now, while this was going on, I wanted to say that our portfolio companies were having a polar opposite experience. They were thriving in the midst of this pandemic. And I had to sit back and say, you know what? The dichotomy of this was that our portfolio companies had access to capital. They had strategic partnerships and resources. They would have been on the other side of this had they not.
That's right.
And I said, this is why the work that we are doing is so important, because it was a determining factor if people's doors were kept open or closed. And our portfolio companies, they didn't just survive, they thrived. They had 3x, 4x, 5x, some 10x growth during the pandemic. So it just shows you how important this work is, the access to capital, the strategic partnerships, the education around entrepreneurship, because the pandemic as a whole was very destructive to our community.
You know, Arian, that's so important. And I like what you said. You mentioned your portfolio companies during the pandemic performed 3X. And I feel like from the research I've done on your fund, you all do more than just distribute money. You know, of course, capital is important, but as investors, leadership, mentorship, there's other ways in which you all provide support. You know, tell us a little bit more about that and how you all, I would say, are different than other funds.
Yes, what we noticed when we got into the venture capital space was that there was a very big lack of education. And though we don't want a formal incubator accelerator, we wanted to provide as much support as possible to our portfolio companies. So we make sure that we match them up with Fortune 500 companies. We give them C-suite level expertise and mentorship through their process of growing their companies. We also provide different brand partnership deals for our portfolio companies. This for us is important, that we're not just allocating capital, that we're actually a strategic partner with them. And we're in this with them because for us, this is personal. We are almost pretty much our portfolio companies. We're entrepreneurs turned investors. We are Black women. We are serving us when we're serving our portfolio companies. And we understand that their success is our success.
Well,
I love that.
I was just going to say, just to piggyback on that, and I think that's a great point that you made, Arian, that their success is our success.
Mm-hmm.
I mean, when I think about the institutional investors that we have on board, like PayPal, Bank of America, MasterCard, Ally Bank, Fifth Third Bank, and many others, they have dedicated their resources as well, not just the capital. To Arian's point, that's sort of the starting point. And that is tremendously helpful for our entrepreneurs because they so need that capital to grow their businesses. But it is the partnership that we have with them, the mentors that they are getting from our investor and our LP base. And then, quite frankly, the experience that we have as general partners. I mean, my background was 15 plus years in retail and consumer goods businesses. So for me to be able to work side by side with some of these entrepreneurs to help them think strategically about their business. There's no amount of money that you can put on that. I mean, Arian built a PR and marketing firm from the ground up, from scratch. Yep. And so for her to be able to counsel and advise, our entrepreneurs, we are helping to make markets with some of these women, and it's incredible.
That's beautiful. That's beautiful. You said we are the entrepreneurs that we're supporting. That that says a lot. So that brings us on to question 2. According to an article from Crunchbase released February 12th, 2021, last year U.S. companies raised records amount of venture capital, just under $150 billion. But of that capital, only $1 billion went to Black African-American startup founders, which comes out less than 1% of total funding per Crunchbase data. So I'm gonna leave that right there. Ladies, tell me why you think that is. Who wants to dig in? Ayana?
I'm gonna let Ayana take this.
Yeah, let me dig in. A lot to unpack there, but fundamentally this comes down to unchecked bias and systemic racism. For over 400 years in this country, we know that we have been dealing with this not only on a corporate front, but we see it with the wealth gap, we see it with the health gap, we see it with the access gap. Venture capital is no different. It's a space that is run by 80% white men. When I think about the statistics that you shared, I mean, what we've also seen is from 2007 to I think 2019, 2009 to 2017, Black women-led startups raised about $289 million. When you think about that within the context of a $1 trillion industry, I mean, this is peanuts. We talked about this earlier. Black women receive 0.0006% of venture funds, and this is a demographic that is actually the most founded. So let me repeat that. It's the most founded and the least funded class of entrepreneurs. And it has to do with bias. When I think about, again, a mostly white industry that has been quite exclusive, not inclusive. And that's why it's not only an issue of a lack of Black investors and Black women investors. It's an issue of Black women investments. And that's quite frankly why we're doing the work that we're doing to change this. When you have never been of the community, how can you understand the community? And that is centrally the issue. And that's why we need more people that look like us doing this work.
Absolutely. I love it. Arian, I know you got something.
No, she put the nail on the head. It is what it is. And systemic change has to take place.
Absolutely. One thing that's interesting, I've worked with entrepreneurs through Angela Benton's New Me Accelerator for, I don't know, 2011, 12. And one thing I'll notice, the reason why those entrepreneurs that came out of that accelerator were successful and were able to raise funds is that they were pushed very hard. Every T had to be crossed, every I had to be dotted, so that when they pitched, they were able to realize success and get funds. And so still, as an entrepreneur, as chief revenue officer of Streamlytics, I'm talking to other data companies and other startups all the time that are very well funded. But when you look at where we are and where they are, it can be a little annoying because it's like we are over here grinding and doing everything possible. And they're over here with the luxury to figure it out, on, $100 million, funds or investments.
And we experience that even when we have to fundraise. We probably had around 300 meetings starting off while we were seeing little traction at that point, And when the pandemic hit, things did move somewhat in our favor. Our productivity got to increase because now we don't have to commute to Silicon Valley or New York or Boston to take meetings. So it's reduced our time to have to travel to get to a meeting. We can take 12 meetings in a day sitting right on Zoom. So there's that element. And then there was the racial reckoning and the spotlight on social injustice with the death of George Floyd and Breonna Taylor and all the unfortunate incidents of police brutality that put a big spotlight on Black equity, that had corporations, as you even just mentioned, open their pockets. So we were able to then have more meetings to have these discussions, to have more pitches and more funding come through. Well, it's no different. Like I said, we experienced it on the fundraising side, no different than anybody else has experienced it in any other industry.
No, I was going to say that is enlightening. Not to cut you off, Ayana, because most people would think, oh, you have a fund, so you're good. Like people are running to you. So that's, I think that's good for, those that are watching other entrepreneurs to know that you know what they're going through. You've got this, you've been in the space for a long time. So you're basically saying, hey, I get it, I understand it. Now let's work, let's figure this out and let's work together. Ayana, I think you had another point.
Well, I was just going to say, if you just fundamentally if we take a step back, there's, I think, I've often said that there's three things that make the world go round. One is power, one is money, and the other is love. And I think as a community, Black folks got a whole lot of love, not enough money, not enough power. And so this is around equity. When I think about, the difference between equality and equity, equality is equal access for everyone, equal opportunity as a promise, but equity is, was that promise fulfilled? And we know that the answer is no. And that is why we've been incredibly intentional about having a fund that is for us, by us. We could have structured it a lot of different ways, but when you focus on the most overlooked, the most historically disadvantaged, the most underrepresented, everyone wins. And that is what we are seeking to do with Fearless Fund and what we've already done.
Wow, Ayana, you've said some powerful things. Power, love, and let's get into the money. Entrepreneurs come or submit questions to us all the time. When they want to enter into any of the American Heart Association accelerators and, give a pitch, or they say, hey, I need people to invest, or I need to go get some investors. But what entrepreneurs don't realize is this is a process. Like there is a structure, there's a strategy to fundraising, and all your T's have to be, again, crossed and I's dotted in order to receive the funds in which you're requesting. So I know we're short on time, so just in a rapid fire type of situation, you both tell me, what do you think, or what would you say entrepreneurs need to have ready to go when they're building their fundraising strategy and preparing to pitch?
Ayana?
Well, first and foremost, they've got to have a strong product or service concept. They've got to have a market and show us that there's a sizable addressable market and they've gotten some traction with that market. They need to understand their financials. This is probably the biggest pet peeve, that entrepreneurs will come to us and not have their sort of run rate, how they've done from a revenue standpoint or even a profit standpoint over the last year, 18 months, 24 months.
Customer acquisition costs, lifetime value of customer, none of that. It's like entrepreneurs don't even look at their own data, but yet they want to request money.
Absolutely.
But won't know how to spend it.
And fundamentally, they have to put themselves in the shoes of the investor. Investors are investing in you because they want a return on that investment. So how are you going to demonstrate how your business has growth projections, forecasts to help deliver a return on that investment? And the best way that we can start to look at that is to see the historical growth and traction of a business. But these are just some of the fundamentals. And then look the part. Don't take meetings in your car, be professional, be on time, be early, have your presentation, have that pitch down, have it down to 10 minutes so that you've got time to answer questions. Arian, anything
and just
you'd add?
grab somebody's attention. You guys definitely went over the meat and the potatoes of it, but to grab an investor's attention, you're going to need a compelling brand story and you're going to need traction in the marketplace. Those two things are what's going to grab somebody's attention. Now, everything Ayana said is what's going to keep somebody's attention. But if you're trying to grab an investor's attention, you need a strong brand story and you need traction in the marketplace. And then on, all those other things will keep someone's attention. And you need to know the profile of the investor. There is no need for you to take a meeting with somebody that does not invest in your space. So it's no different when we have to fundraise. We're like, okay, wait a minute. We fit the need that they are trying to solve. We are a fit for them. This business is win-win. You want the relationship win-win so that you continue on to be in business. Because if you win and I lose, I'm not doing business with you again, and vice versa. Once you honed in on the profile of who your investor is, those are the people that you continue to talk to then on in order to reduce you wasting your time.
So good, so important. Ladies, I want to thank you again for your time. Thank you so much for sharing your expertise and your wisdom. I know some entrepreneurs have walked away with some really good nuggets. So Ayanna Parsons, Arian Simone, a Fearless Fund. Thank you from American Heart Association.
Thank you for having us.
That was amazing. I know that our viewers have really enjoyed hearing from you. We've got one more Fireside Chat next month, plus the Faith-Based Accelerator finale on July 22nd. Please be sure to follow the American Heart Association on all social media platforms for updates. To join us for both events, visit empoweredtoserve.org to learn more.